Here's your story of the day. The competition was fierce over which exchange would get to list one of the biggest IPOs ever, Facebook, and Nasdaq won over the place I'm in right now, the NYSE. Nasdaq had insisted that its systems were tested and ready to go, but all systems were not going. In fact, Nasdaq had set itself up by stating that 11 a.m. would be the start of trading, but that time came and went. Now, when the stock finally opened, there was no huge pop as many, including myself, were expecting. Instead, brokerages were receiving notices that trades couldn't be confirmed. So people had no idea whether their trade had been executed, and if so, at what price. Now, later in the day, Nasdaq said it was going to manually send confirms. Now they bring in the humans. The stock slid dangerously close to the pricing level of $38, causing the underwriters to come in and buy up every order at $38. Now, this is not what an underwriter wants to do. I mean, where were all those buyers? Well, when you release 500 million shares in the market, what do you expect? The syndicate is now long all this stock that they don't really want to hold. Remember, they're in the business to sell stock, not to buy it. So at some point, they're going to have to start getting that stock off their books and selling it. What does the Monday morning quarterback say? Well, Facebook probably should have listed with the NYSE. Lawyers will be lining up to challenge the trade executions. More small investors, sadly, are going to become disillusioned with the stock market, and Zuckerberg will still be a billionaire. Now, the writers will make their fee no matter what, even though they may lose a little during that buyback frenzy on Friday. Everything can be handled by the robots, right? Well, this morning, now we're looking at Facebook. It's trading almost 5% down.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're getting